In this presentation, we will enter payments for inventory for which we had created purchase orders in the past and now are making payments for within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by going to the view dropdown up top and selecting the open windows list. And we have the home page open. In a prior presentation, we had created invoice or purchase orders for inventory. Recall, as we did so, we said that when we made a purchase order, it's not like when you just buy something. If you're to buy inventory, say even on Amazon, or if you're going to buy something personal on Amazon, there's no actual payment that's going to be happening at the point in time that you make the purchase order. No credit card, no payment, no nothing. We're just going to be requesting the inventory. We have basically the leverage to be able to get shipped the inventory first, then to make the payment after we have received it. And therefore, there's no financial transaction with the purchase order. So that's going to be the key point to understand. We track the purchase order, no financial transaction with it. Now we're going to say that we have received a payment for the inventory and are going to be recording the inventory. So if we go along with this arrow here, of course, we would make the purchase order. We're imagining we're getting guitars. So we're going to say, hey, vendor of the guitars, we would like some guitars for our store that we will then sell to our customers. Here's a purchase order. Please give us guitars. We're not paying you yet until we get the guitars. And then they're going to ship us the guitars, and then we're going to enter either the bill and or payment at this point in time. Before we move forward, let's take a look at the reports. Let's open up the reports, consider what will happen when we make those payments. I'm going to open up the reports here. We're going to go to the company and financial. We're then going to go down to the balance sheet. We'll change the dates up top in the customer reports section by choosing the dates of 01/01/20 to 12/31/20. That's going to be January 1st to the December 31st, 2020. This is going to be our balance sheet. Now, if we think we're going to get the inventory and we make a payment directly, as we will start off doing, we're simply going to write a check for the inventory rather than going through the bill first and then the check. So if that is the case, the checking account will obviously go down. We're going to write a check. The other side then is going to be the inventory. The inventory will then be increasing. There's no effect on the profit and loss or income statement on the receipt of inventory. Also, the inventory subledger will have to go up for the item of inventory, the guitar, that we will be purchasing. So that's what we expect to happen. I'm going to open up the other report, being the profit and loss report, company financial profit and loss report, dates being 01/01/20 to 12/31/20. Now, there shouldn't be anything happening to the income statement because we're not actually selling the guitars yet. We've purchased the guitars. They haven't been sold. They're on the books as an asset. Shouldn't be any change to this report. The final report we want to practice opening all the time is under accounting taxes, and it will be the trial balance report. Once again, the dates 01/01/20 to 12/31/20. Now, we're going to go back to our home page. Now, instead of going to the second item in the arrow, which would typically be that we're going to receive a bill. We can imagine we receive the guitars that we have ordered. We open up the box. There's a bill there. We enter the bill. But we're going to jump straight to, rather than entering the bill, straight to writing a check. And so we're going to go down to actual writing a check, which we can do down here, or we can go to the banking drop down and say write checks. And we're going to write the check to the vendor. Now, you could go to the register, remember, to write checks. However, if you're going to connect the checks, as we are here, to a purchase order, you may want to use the check field to make sure that connection will happen. I would typically use the actual check itself. We're going to be writing a check from the checking account, which of course is the default typically. I'm tabbing through this, the 1004. We want to keep that. The date we're going to have at the 25th. We're going to jump around a little bit with the dating, so that we can group like transactions and go through the flow of the processes a little bit more efficiently. So to do that, I'm going to say plus, 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 plus. I'm hitting the plus button to get up to 25. Then we're going to say, who are we paying? We're going to be paying a vendor of Epiphone. If you select the drop down, you can see we're getting quite a few vendors now. You can start to just type in Epiphone, which is usually what you want to do for most companies because most companies do have a lot of vendors. Then it's going to give us this pop-up. It says, hey, there's an open purchase order exists for this vendor. Do you want to receive against one or more of these orders? We do. It's saying, hey, you got a purchase order. Is this going to be against the purchase order? We're going to say, yes, we would like that. We'd like you to basically, in essence, connect the purchase order or populate the check with the content of the purchase order. Now, the purchase order was for inventory, a guitar. Here is the item. You got to check it off. So we're going to go down here and check it off. We're going to say, okay. So there we have it. And you'll note a significant thing happened down here that you got to basically be aware of whenever you write a check. There's two tabs down here. One tab is an expense tab. The other is the items tab. Those two tabs are a little bit deceiving because really items, you can more accurately basically call it inventory. The items are going to be inventory because we're writing a check. So all the items when we went to lists up top, for example, and the item lists, and let's go in there just for an example. You'll notice most of the item lists for us are inventory. We have other items there, which are service items, but those aren't going to be included when in this situation when we're writing a check. And we have the taxes and whatnot. So notice when we write a check, then generally the item is going to be an inventory item. So I would think more accurately, you could think of these tabs as basically inventory items here that we're purchasing when we write a check. And then the expenses, usually when we write a check, we're over here creating an expense, right? If we have a drop down, we create the expense, such as telephone, utilities, and so on and so forth. But that also is not exactly accurate. Basically, the expense tab is everything else. Everything other than inventory, in essence, you would be using this tab for, because you might be purchasing like an asset like we did before, a fixed asset type of account or something like that, writing off a check for a loan. So this side, the expenses, is really anything except for inventory, because inventory has to have its own tab. Why? Because we not only need to increase the inventory account by the amount that we are purchasing, but we also need to have the subledger be populated. The subledger be populated by the type of inventory we are buying, in this case an ELP, Epiphone Les Paul. So notice it all populates for us because we're just drawing this information in from the purchase order. So what's this going to do? It's going to bring down the checking account because we're writing a check. That's what a check form means. Checking account will go down. Other side, inventory going up by the cost, 400. Then we're also going to have the inventory subledger account go up by the item of an Epiphone Les Paul to support the general account on the balance sheet for inventory. Let's check it out. We're going to say save and close. Then we'll go to our reports within the balance sheet. We go to the balance sheet report. Here's going to be the inventory. Inventory will be increasing. Double clicking on this. Inventory is going to be going up by the 400 for the Epiphone purchase. Here's the check. It was a check that we wrote. If we double click on that, then of course there's our check. Closing this back out. Closing this back out. Then we're going to go to the checking account, and we have the 400 decrease there. That is going to be the check that we just wrote as well. Closing this back out. Then we can think of our reports up top, the supporting report for the inventory, which we go down to the inventory items, inventory, and then we got the inventory valuation summary. Changing the dates to 12/31/20. We see that we have 2,344 in total inventory. That then should match what's on the balance sheet, 2,344 as well. So the supporting documentation, which will be laid out by item, by inventory item that we have, in this case, guitars that we have. There will be no effect on the profit and loss because we purchased an asset, and so cash went down, the assets went up. No effect on income or expenses. And if you take a look at this in terms of the trial balance, you may be able to see that and navigate a little bit easier, a little bit quicker. Okay, so that was good time. So let's do it again. We're going to do it again. We're going to go back to the home tab over here. We're going to write another check. So once again, we have a purchase order. This time I'm going to go into the purchase order real quick. We had a purchase order for Gibson. We're going to tie this purchase order to the check that we will be writing. The item is already in the purchase order. So Gibson, we ordered a Gibson guitar for our customer music store. So music store came into our store, said, hey, we need a guitar. We said, that's fine. We're going to go to our vendor, order it for you. We went to the vendor, ordered it. It now has received it. We have received it. We have not given it to the customer yet. but we're going to complete the order for the guitar payment that we have had, actually writing a check for the inventory we have received. We're going to go to write checks down here. We're then going to say it's going to be the checking account. That's it. The number should populate by itself. We're going to keep the date at 121. The vendor we can find by the drop down or simply type in the letters GI, and that's all we need to populate it. So I'm going to select tab. It's going to say, hey, there's a purchase order related to this. I'm paraphrasing. Hey, there's a purchase order related to this. Do you want to use that? Yeah, that's what we want. We're going to say yes. And then there's the purchase order. You got to make sure you check it off, and then say okay. Now notice as these pop-ups happen, you might get scared and say, well, what if I miss that and close something on accident? Well, then I would close the check altogether, do not record it, open it back up, start the process again. The pop-up should pop up. Okay, and then we've got the 598 is going to be the amount. It's populating for us automatically. So it's populating for us based on the purchase order that we have entered. We have the item of a Gibson SG. Once again, we're using the items tab for inventory. I would call it the inventory tab, as opposed to the expenses tab, everything else, because we need to not only increase the inventory account, GL account, but also subsidiary ledger tracking the inventory by item. So this is going to do the same thing, increase the inventory account, and it will decrease cash, increase inventory, and increase the inventory subledger listing out the item that we purchased. Let's check it out. We're going to say save and close. And then we're going to go to our balance sheet once again. Within the checking account, it should be going down by the check number 1005 right there. There it is. Double clicking on it, we see check 1005. Closing this back out with the gray X, not the big X up top. Closing this back out, we can then go into the inventory, double clicking on the inventory. We can then see the check number 1005. Once again, double clicking on that. There is our check once again. Closing this back out with the gray X and this back out with the gray X, we can then go into the inventory report. We should be tying out to the 2942. So if we go to the inventory, we got the 2942 here. We bought a GSP. So now we have our Gibson guitar that we purchased and is included at this time. So that's going to be this one. No effect on the profit and loss. If I go into the profit and loss within the open windows, because we purchased one asset with a check, one asset went down, cash, the other asset went up, inventory. And if you look at the trial balance, you can see this possibly a bit more clearly. Now there's one more thing we want to note with these checks as we go into them. I'm going to double click on the check. I'm going to go into this one of these again, the 1005. I'm going to double click on that and zoom in. You'll note this is the check that we wrote. Note that it says billable down here. It says billable because we put the customer in there. So it's populating the customer field because when we made the purchase order, we made it specifically for a particular customer. We didn't have to. If there wasn't a particular customer, then we wouldn't have entered the customer tab and it would be in our store just sitting there waiting for someone to buy it instead of us buying it specifically for a customer. As we did, we entered that in the purchase order. That will populate here. And that means that when we create now an invoice or a sales receipt for music store stuff, then it will ask and say, hey, do you want us to populate this item for it? Because it says basically that you purchased this item specifically for this customer music store stuff. So the next step, if I close this out, we can imagine the whole story. I'm going to go to the home tab. We're going to say, okay, someone came into our store, music store stuff. A customer came into our store. They wanted a guitar. We don't have it in the shop. We said, hey, we're going to purchase it from our vendor. Therefore, we sent a purchase order to the vendor. The vendor then shipped us the guitar. So now we have the guitar. We haven't given it to our customer yet. We wrote a check to then pay off the guitar. And that check then increases the inventory on our books, decreases the cash. Next, we're going to write either a invoice or a sales receipt to complete the transaction with our customer. Say, hey, the guitar's here, come on in, and then we'll create a sales receipt if you come into the shop, or if we're shipping it to them, we may create then an invoice, and that will then populate this information all the way through to the final step being the customer. Remember that the customer doesn't necessarily need to be there, because we may have just purchased the guitars to be in the store, in which case we could say the customer wouldn't have come into the shop. we would just have purchased a purchase order to stock our inventory, not including a customer for it. Then when we pay for the inventory, it would just be on hand. We would have our group of guitars that would be in our store ready for purchase for people that walk in and purchase them.